All right, good morning, everybody. So we're back at it, day two. We're seeing some comments from the president about the ceasefire being broken many times. Lots of reports saying that there is no delegation headed to the ceasefire talks. The deadline's approaching quickly, so that pretty much is front and center in front of everything else. We do have some Fed activity today with Senate confirmation hearings and then Fed speakers on top of that. A little bit of pushback in Japan on the possibility of a hike there. Really, there's not a lot on the calendar for us to focus on. It's just this energy crisis, right? So we can see here the president's already starting to give validations or reasons why he should be allowed to begin this bombing campaign. We don't know that for certain, but this seems like a prelude to an activity. I wouldn't doubt that at all, Jay. At this point, I really wouldn't doubt it at all. So we are left in hurry up and wait mode to see what we're going to get. Things don't look bad out there. We've got a range, from nearly 0.75% to the upside to 0.25% to the downside. Japan is basically flat, Hong Kong as well. Then the US markets getting into the green with the Dow up the most. That's a little odd. It's not often that the Dow leads us in the pre-market, but it's the blue chip, and there's a lot of news with Anthropic and Amazon, and Apple's in the news this morning. So, yeah, it's not really a surprise. Just continue to resist the thing that we always have done. Right? We're in this unusual environment. Mag 7, market breadth, dealer positioning, 0-day flows, they're not in control. I know that's weird because they almost always are, but right now it's VIX, crude, treasuries. They are what you want to pay attention to for intraday signals that could potentially get us moving or not allow us to move and keep us trapped in a range. It's just the way it is right now. For the 8:30 data print, these numbers are a little wide. They're not bad. And, it's retail sales, but there's enough range in here for the market to get it wrong. And being caught off sides or getting surprise numbers is when markets really make a move, right? If we come in as anticipated and everything is fine, then we probably won't see too much of a hiccup. But watch the clock, 8:30, see if these numbers come in. And, you know, home sales doesn't get a lot of attribution, but these are a little bit like the 30-year bond. That thing is sleepy. Most people don't watch it. And then every once in a while, they'll whack them. So 10 o'clock, it's not that hard. Keep your eye on the clock. It's one of the best indicators you got, and it's free. Everybody's got one. Yeah, exactly right. So, just don't sleep on it. Believe me, I get it. You never hear anybody talking about home sales as a reason for the market to move. right? It's not as sexy and glamorous as CPI, PPI, non-farm payrolls, but make no mistake about it, it has before and it will again. It just doesn't happen very often. Now, this Congress meeting, this Senate meeting with Warsh, nobody should have an expectation that he's going to go in and not tell them exactly what he thinks they want to hear, right? He wants the job. So he's going to say whatever he thinks he needs to say to get the job, right? It's not like he's going to go in and say, I'm the right hand of the administration, and whatever the administration wants, I'm going to give it to him. Of course not. He would never get the job if that's what he did. Now, whether or not that's actually his intention, I don't know. But I would anticipate that this committee meeting is going to be very much like all the others. It'll be drawn on partisan lines, and each side will stand to defend or fight against the proposal just because their party is for it or against it. And any facts or rules or reasons won't matter whatsoever. Just basic politics at your finest. I continue to point out this website for people who don't know that it exists. This is the FedWatch. You can just Google FedWatch. It's by CME. You don't need an account. It's free. You can see I'm not logged in. I don't even think I have an account to log into. You don't need one. Just Google FedWatch. You can come over here and you can see what the market is anticipating for the interest rates and the Fed proposed moves, whether we're going to get a hike, a cut, a pause. How long is that pause anticipated? And are they pricing in changes? Now, you'll see it move, right? It'll tick up or tick down, and it'll adjust itself in small incremental ways, right? It went from 90 to 89.7, small changes. And that's okay. Don't even trip on that. But if you come in and you see significant changes, 25%, 30%, then you know that there's some radical changes happening. And look, most of the time, you're not going to see anything. It's kind of the point, right? So, especially after big data prints, big economic events that come through, CPI, PPI, that sort of stuff, even big headlines, it doesn't hurt to jump in here just to take a look to see, hey, did that news affect the market's perception of what the Fed is going to do with interest rates? That's it. It's simple. It takes just a couple of seconds. You take a peek, look up and down the curve to see if anything has really changed, and then you just move on. One of the things that will move the market is what the market is doing with these interest rates, so the projection of what is going to happen with these interest rates. So if they're pricing in a rate cut, if they're unwinding a rate cut that has already been priced in, those will radically move the market, hold us up, hold us back, knock us down. So pay attention to it, right? It's free, it doesn't cost you anything. It might seem complicated if you've never been here, but that doesn't mean you shouldn't go there. Keep going back to it. It won't be unusual to you. It'll start to be familiar. You'll get comfortable with it. The headline from the president this morning really didn't move crude all that much. Maybe the algos uh, didn't read the threat in there the way that I did. I don't know. You never know with those algos. That's kind of the point. The CTA positioning is odd. I actually ran it over to Gemini. This is the CTA positioning right now. It's a hypothetical. If the market sells off, what's the CTA positioning going to look like? And if the market doesn't sell off, what's it going to look like over a 2-week period? And the idea here is no matter what the market does, CTA positioning is still anticipated to head up, right? This is sort of the split where the hypothetical starts. Well, both sides go up, even though it tends to curl over a little bit here. So we're going to get more buying on that CTA side. The VC funds, they're still connected to volatility, which needs to get and stay below whatever new level they're using. 1920 is a key historic level. It's been around for a long time. It's the level I was watching yesterday. We're underneath that now in the VIX. So as long as we're below 1920, the market has permission, really isn't the right word, but validation to move higher. Keep your eye on the VIX. If it gets back above 1920, it's going to be hard to keep a breakout in the S&P and the NASDAQ or to sustain one. We're looking at net gamma right now on the SPX. Reference price 70.87. Here's 7100. Now the ES is up in the pre-market, so we know the SPX is going to also open up as long as we stay up in the ES until the bell rings. So we might be above that 7100. We only need 13 points. We can be above it. If we open above that level, we'll have those underneath us. And then we've got the next speed bump, 7150, and then 7200. It's a significant level. So the path upward, we got to get through those levels. They can act a bit like a magnet, and they can fuel the fire if they start rolling out of them as we get near them. So as usual, it's the big round numbers, 7100, and it's the 50 levels, 7150, 7200, 7250. I mean, you don't even need a chart like this, right? If you don't have one and you can't afford it or don't want to buy one, you really don't need it, because you can just make the assumption that it's a big options level, because it is. You just won't know how big, right? Unless you have a subscription to something. Get out of here with that. All right, at 9 a.m. and at 4 p.m., we've got public addresses. Otherwise, a lot of this is closed to the press. This is the president's schedule. And if it's closed to the press, then of course there's no gotcha comments, off the cuff remarks, anything like that. Of course, he's still got his phone and he can make comments whenever. This is just those extra exposures to, the press and any comment that could fuel some tirade. The call wall and the put wall did not roll up last night, so they finally stayed put for a day. Overnight volume 72.5. It's above the average, but it's a lot closer to the average than we've been in a while. We got an inside day breakout, and so far we are keeping it. We've reached yesterday's 1236, so we're done with that. We still have Friday's high to deal with. we did get back to Friday's close, struggled for quite a while there to actually get that resolved. So now we're done with that, and we're making that run to Friday's high. And that'll put us back into all-time high territory. There's a very simple market phrase out there that says never short all-time highs. Now, never's a big word, and everybody's got their own trading style. Just be cautious, right? That's it. It's as simple as that. Just be careful. For the anticipation of where do we go next, well, that's what the fibs are for, or the quadrant lines. 72, 78 is the 111. If this breakout is going to fail, it likely will fail at that point, right? That's one of the best things about the 111 is its ability to highlight where a potential breakout failure point is. And if it's not a failed breakout, then 73.82 is the stopping point. Now, I'm not saying we're going there today, and I'm not saying it's going to be to the tick perfect, but if we break out, those are the levels I'm looking for. If you are looking for a short, and I know a lot of people that tried to short this all the way up and they're tired of it and they've had a lot of losses from it, use a trigger, right? This white line is a 3-period daily moving average, and you could attempt to look for short opportunities if we are underneath it. Now, me, I don't short from the hole, so I'm not going to try to short it just because we went underneath that line. But if we are underneath the line, you could begin to look for short opportunities. Your shorts would have a much better chance of working if we're underneath that line than if we're above it. The target would be the 10-day, which at the moment would be 70.15. White line is at 71.35, so there is plenty of room for you to find some short opportunities once we're underneath that white line. So you don't have to jump the gun. If you want to go short against all-time highs, hey, you do you. We don't have a market maker move this morning. I think if there was some shenanigans piling up against the economic calendar, we would see it in some additional hedging, and we don't. We also had above average volume in participation last night, so they're not sitting out in front of any sort of data. These red lines are a representation of the 20-day average move. Like when we ask, what's this market normally do on a day-to-day basis? What has it done for the past month? Day after day after day. It's went about that far. When we're not overly bullish or we're not overly bearish, we won't even reach those lines. When we're getting a little juice coming into the system, we could reach either side. But it's not bullish and it's not bearish. It might feel like it because yesterday, was a pretty small range, all things considered. And we're expanding outside of that small range, so it really feels like we're getting somewhere. And we are up about 0.5%. But the average daily range is 1.6%. And if we split that in half, it's 0.8, right? So from the Globex last night, we could move 0.8 in one direction, or we could move 0.8 in another direction. The distance between these two red lines is 1.6. You see it right up there. So when you look at what we've been doing, that up and down that you see with price It's just a part of that move every day, right? If we get overly bullish, we'll go to the yellow line. It's still the full ADR of that. And if we get bearish, we come down here. 70.32 cog line or the previous breakout point. That would be the lower ADR full. It's a pretty good gift, all things considered. Relatively decent setup this morning. Yesterday didn't really have much anticipation of good stuff, so I was messing around with gold and copper. I should have looked at crude, but I didn't. So, on those days where you're just not really expecting much, look at another market. I know it's easy to just focus on the ES and the NASDAQ every day, but there's other stuff out there to trade. Today's floor pivot is lower than yesterday's. That's bearish. Price opened above it. That's bullish. Kind of cancels each other out. We have a MDP so far this morning. That's a missed daily pivot. Now, it doesn't count until the end of the day because at any point we could go down there and hit it, and then, well, it wouldn't be missed anymore. 71.32 cog line is the floor pivot. The gift that I was referencing a moment ago is this really nice setup that we have this morning. I think it's pretty nice, all things considered. What do they say when you get lemonades, just open a lemonade stand? Yeah. So if we begin to break down, 71.63 is the mid. That's your target. Underneath the target, aim for the Globex low, 71.44. And then under that, 71.32. Getting back down here and getting into the floor pivot. Of course, you'll have to deal with yesterday's mid. And just getting back inside of yesterday might be a bit of a trouble spot. But that floor pivot would be my price target. All right, we are at R1. The risk here is R1 to S2. So if things do get bearish, and it wouldn't be bearish to come down and get to this floor pivot, that's not really bearish. Mechanical flows could get us down there, no big deal. But let's say some headlines or something really negative comes in today and we do actually get bearish, then we'll punch right through that floor pivot like it isn't even there. And we've got this weekly pivot channel top. We'll have to fight that. It's right on the S1. And then we've got S2 down here. R1 to S2 is a very common phrase with these pivots. It doesn't owe us that just because we got to R1. And it's really just a function of price action from the higher time frame. If we've been working our way down and we're on our way to the upside, they would be asking the question, how far to the upside do you think we're going to go? R1. And then we resume that move to the downside to S2. Right? That's kind of the idea behind it. But we haven't been making those kind of moves, right? We've been making moves in the other direction. So an R1 to S2 really doesn't fit with this rally that we've been running. Doesn't mean that it can't, right? This could be a last hurrah into an R1 before we start the move to the downside with an S2 target. As long as we're above R1, there is no short. All right, looks like we're filling in that shallow area from last week's profile. We got the point of control down here around 75, and then we built out this area late stage last week on Friday, right? We were talking about that zone yesterday. So far this week, we started to fill out this area here, right? This is sort of a shallow area. We had some anticipation that this was going to be difficult to get through that 71.54 area, and it was. We got hung up there for quite a while, but we are now through that level and pushing against all-time highs. So if we try to fade, we could find the market gets supported there or defended around that 70.60, 70.55 area. $10-day, 30-minute volume profile and TPO. By the end of this week, we should have a bit narrower of a profile, at least from the downside. We've still got a few days before we get into the candles that made this current point of control. It's mostly those, but a little bit right there. So we got to get those off the table if we want to see that point of control move, or we got to hang out in one spot and build out a volume profile zone great enough that we can bring that point of control up to us. 71.50 is a good contender at the moment, or whatever this level is, 71.55, 71.60. It's right up there, pretty close to where we're at. So if we do get stalled here, even just for another day, it's likely that we can bring that point of control up. It's not necessarily a bad thing to have that point of control brought up. We'll be able to lean against it and push higher off of it. The April 17 VPOC, we got hung up into that last night. It's worth considering how price responded around that level, but we are done with it. We have a new VPOC from yesterday, just another level that's underneath us. Now, I'm not going to zoom in and get it to the tick perfect, just around numbers close enough for me. 71.40 seems to fit, maybe 41, one or the other. So if we break the Globex low, which is the value area low, then yesterday's point of control is going to be the target. It's probably really close to yesterday's mid now that I'm looking at it. Yeah, it's right on top of yesterday's mid. That's the RTH mid, but still, it's a very powerful level. That's going to be a difficult level to get through. Once underneath that, then you can focus on all of yesterday, which brings the mid close to yesterday's low, I believe, the RTH low. I missed that point on the bottom, but that's pretty close. Yesterday's RTH low is the mid of all of yesterday. So that'll be the next point, right? 71.22 if 71.40 breaks. Level by level by level. Run it all the way down. Looking at our week so far, we're back above Friday's close, not above Friday's high. So we've got a lot of room to the upside. 72, 74. This green line way up here. That's the weekly expected range high. So plenty of room left to the upside before we would consider having moved too far too fast. Looking at our distance on the 10-week, we've been higher than this before, but as you can see when I hold my mouse here, we haven't generally stayed higher than this before, right? Generally, if we do get even this high up, we tend to fall back from here. There are a few exceptions where we got this far and we got above it and held it for a day or two, three, but usually it's attached to strong headlines, um, big changes in treasury yields, something like that. So, sure, if we get a big enough headline, then it's possible we can keep this level or go higher from here. But more often than not, this is the point of no return. Get any higher than this, we tend to fall back against it. That is a weekly, though. Now, looking at our distance from the 10-day, 2.3% above the 10-day. It's not that bad. We've got higher levels behind us. We're not overbought. We're not overextended. We haven't moved too far too fast, and it doesn't owe us a pullback. I know you might want it, but on this time frame, we're not there. There's a 1% path to the upside from where we currently are, which is, we're up 0.4 this morning. We could go up another 1 plus on top of that, and we still wouldn't be overbought. So I wouldn't look for mean reversions from our current location. We're going to need to drive higher for that on the daily anyways. Forgot to look at something. This purple line down here is our weekly pivot. Now, we've had weeks where we open a long ways away from that weekly pivot. And on those weeks when we're that far away, there really isn't much room left to the upside, right? Because we took it all in the gap up or whatever run we had, and there just isn't much room left. Last week, we opened on that floor pivot, so we had a whole 4.5 to 5% run that we could make. This week, we opened on the channel for the pivot, and we've started the run. The question I had was, how far have we gone so far? About 2%. So we're not there yet either. This says we could make, an easy another 2 to 2.5% before we would begin to consider that maybe we've traveled too far from that weekly pivot. We're not there yet. So looking at what's down this morning, the Mag 7 down volume is down. Yes, that's a double negative for you math nerds. China with the KWeb constituents also down. Gold miners are down, but not enough. We need 0.5%, and they're just not there yet. They're close, but hand grenades and horseshoes. So looking at what's down, we don't really have a whole lot yet. And looking at what's up, benchmark of 0.5% starts down here with the ARC group. We got the Mag 7, chips, uranium, expanded software, some riskier stuff like IPO, quantum, another riskier thing, UFO, another one. So they're willing to take risk this morning. More of the lower float, short squeeze potential. Just keep in mind, market breadth isn't our driver right now. So we can get a little squirrely with the market breadth, but it's not going to propel us or break us down. Still, if I was looking for a rally day, the sectors that I'd want to see: chips, communications, generically speaking, tech, Mag 7, consumer discretionary, some financials. And we have most of that. We're missing the financials, but we've got some Bitcoin, and then we got those risky ones. So needs a little bit of room, and I'd like to see it broaden out so that the rising tide lifts all boats. But it's a good start. So a pretty simple day, guys, and a relatively decent gift. GTFO as usual. If we break our Globex top, aim for the ADR half. Why not, right? It's the red line up yonder. If we drop back below 786, go for the half. Yesterday's high, yesterday's close, the mid of yesterday, which will get you to the 111 of the Globex. And work our way down from there, right? All things considered, this is not a bad way to start the day. We got really nothing in the economic calendar. It's all going to be threats, headlines, maybe something out of the Senate if they want to, play dirty and leak stuff and misquote people and do all the typical shenanigans that they do. So it's going to be headlines more than anything else. Keep your eye on those VIX, crude, treasuries, headlines. That's what I got for you guys. Be careful, be safe. I'll see y'all tomorrow.